Hej och hjärtligt välkomna ska ni vara till Investerarafton special. Idag ska vi presentera vår egen variant av Jules Vernes Jorden runt på 80 dagar och det kommer vi göra under 90 minuter då vi presenterar 3 stycken investeringsmöjligheter i råvaruprojekt i Asien, Sydamerika och Afrika. Eftersom dagens bolag är engelskspråkiga så kommer vi att fortsätta på engelska. Hello and welcome, and if you tune in overseas to Investerarafton special, you're most welcome. If you watch this live, you can as always ask questions direct to the management, and you will do that via the top chat on your right hand screen. We have 3 companies presenting today, so please watch the program or the schedule rather, and add your question sooner rather than later. You can use English or Swedish, and I will, as the best of my ability, translate those to English to the company. Investerarafton special is a cooperation between Investerarbrevet.se and Scandinavian Alliance. Scandinavian Alliance is a full-service company expert and as such can connect any company to the Scandinavian and Northern European markets and its pool of financing. For more information, please go to scandinavianalliance.com. And this broadcast is brought to you via Investerarbrevet.se, Direkt Studios, and the companies that are presenting. Well, first out is the Canadian listed Steppe Gold, which has assets in Mongolia. And here to walk us through the opportunities, businesses, the environment, and the genius in being active in Mongolia is Anil Varach, Executive Vice President and Director. So let's see if technology is with us. Anil, can you hear me?
I can hear you. Thank you.
Excellent. And I can see you and you're looking swell. So Anil, the floor is yours. Please go ahead.
Thank you so much. And thank you everyone for joining and hearing the Steppe Gold story. So Steppe Gold today is a gold producer, gold and silver producer, listed on the main board of the Toronto Stock Exchange. We'll get into our story, which is a quite exciting story over the last 4 to 5 years. And in a way, we're just getting started. But quite exciting story that I'm happy to be able to present today. So we'll just go to the next slide on page 3, please. As the usual disclaimer, so company milestones and kind of where we started and where we're going today. So as I mentioned, we just started the company 4 or 5 years ago. So actually, at the end of 2016, we started the company as a private company with the ambition of building Mongolia's premier precious metals company. And for those who are wondering why Mongolia, well, Mongolia is one of the resource-rich countries in the world. It's relatively underexplored and still home to world-class discoveries and mines, with the Oyu Tolgoi copper mine being the 4th largest copper discovery and mine in the world. So home to world-class assets, discoveries, and mines. But that's in the copper space. And what we're looking for is in the precious metal space, where we think we have a distinct advantage. And again, going back to why Mongolia, well, our team, our executive chairman and CEO, have worked together since 2009 in Mongolia. In 2010, they built another company called the Hunu Coal. That was a coal company that was listed on the ASX. I think they raised 20 million on the IPO in 2010, and that was sold for $500 million cash in 2011. So there is a track record of success in Mongolia, and certainly we know how to manage the jurisdiction quite well. In fact, Steppe Gold today is considered a Mongolian company listed on the Toronto Stock Exchange. Our CEO is Mongolian. Half our board are Mongolian, and most importantly, 99% of our staff of now 300 in country are Mongolian. And that's the way you should be running a business in any jurisdiction that you work. If you're as local as possible, be as local as possible, you'll get the benefits from the locals, from the province, and even the federal government. And certainly we've seen the rewards of that benefits, which I'll get into in a bit. So in 2017, we acquired the 2 assets that we own today. Our cornerstone asset is the ATO project that we purchased for $20 million US in 2017 from Centerra Gold. And our second project is the Udumhundi, or the UK project for short, that we also purchased, which is a very large exploration license, 14,400 hectares, that has never been drilled until now, but has been drilled all around the adjoining licenses by another company who've had a lot of success. So it's a very exciting exploration license But the ATO project is the fundamental base of our company today. It's a cornerstone asset. Centerra had previously spent about 30 million US on the project, drilled 67,000 meters, 28,000 meters of trenching, but most importantly, got a fully licensed and permitted for a heap leach, which is our phase 1 operation that's in current commercial production, but also for our phase 2 expansion. So we're permitted for a CIL or a CIP plant, a flotation circuit, a fixed crushing circuit, a tailings facility, power upgrade, camp expansion. So they did a lot of the heavy lifting, and what we did is take a phased approach by building the heap leach operation first, getting established as a producer, a taxpayer, a royalty payer, an employer in country, and then using that cash flow from the heap leach operation to grow the larger asset base underneath, which is our phase 2 expansion, which today already has 10.5 years of mine life at about 100,000 ounces, and that'll continue to grow. So it's certainly beneficial to us to take that phased approach to help de-risk the country, the asset, and use cash flow to grow our company. So in May 2018, we listed the company on the main board of the Toronto Stock Exchange. It was the only main board mining IPO that year. So in a very tough market, we managed to raise 25 million Canadian and build our first mine. So March 2020, we started production for the first time ever. So again, this was at the beginning of COVID, where Mongolia was closed, restricted. The borders were closed. You couldn't get in and out of the country if you tried. So luckily, we had a local team, and relying on that local team to bring production online for the first time ever. Startup, ramp up, 100% local team, Mongolian team. We were very successful to bring production online. April 2020 was our first gold pour, and that quarter of 2020, Q2 2020, we produced 15,000 ounces at about $734 all-in costs, 10 million US of EBITDA, our first ever quarter with a local team. So, had we relied on expats to run our business, we wouldn't be in business today because, we couldn't get in the country for over a year. So thankfully, we were smart by having that local team. So March in 2020 is when we had our first, we started production for the first time, and July 2020, I think our stock price went from 90 cents to $3 on that first production. We took an investment at 2.15 at that time from Eric Sprott. He owns 11% of our company, and that was the last equity raise just over 2 years ago. So we haven't raised any equity for over 2 years, but have created a significant amount of value. And just to remind our viewers, when we listed the company at $2 back in 2018, the gold price was about $1,250. We hadn't built the mine. So we had build risk, finance risk, capex risk, and a final permit risk. And here we are a few years later, having demonstrated strong cash flow production, and we're trading at levels below where our last investments were made. So certainly an opportunity for investors to get in before the next recovery, the next re-rate in our stock price. We've seen it at $3 when we didn't have 2.5 million ounces, and here we are today, much more valuable. So I'm going to skip to 2021. In February 2021, we put out our first resource update on the project. So when we bought the project, it was about 1.2 million ounces. Today, it's about 2.5 million ounces. Back then, it was 210,000 ounces of reserves. Today, it's 1.6 million ounces on a gold equivalent basis of reserves. So significant amount of value add that will continue to grow, because this is only down to about 400 meters, this current resource update. Later last year, we put out our feasibility study on the expansion project. So our phase 2 expansion, which is actually underway today, we expect to come online in 2024. We'll double our current production profile, have similar cost structure, but has 10.5 years of mine life at about 100,000 ounces. That will continue to grow. Just 2 weeks later, we received a 60 million US debt package sponsored by the Bank of Mongolia. So that's very important to show that we are doing things properly in country, and we have the support of the government, because 2 weeks after that feasibility study, we had almost half of the capex lined up in our bank from the Bank of Mongolia. So you have a government that's very supportive, pro-mining, pro-foreign investment, pro-Steppe Gold, because we're doing things properly. I've never seen a company put out a feasibility study and then have half of that capital lined up 2 weeks later. So very exciting. In March of this year, we restarted production. So what happened last year, we produced about 12,000 ounces last year and ran into supply chain issues that everyone in the world obviously is encountering. Cyanide was an issue to get into the country. with the land border with China continued to be closed today, we'd have to find other sources to transport and bring it in, and new permitting and export. So it took quite a while to bring that online, back online, over 9 months, but we successfully did so, and we expect to continue production without any hiccups going forward. We've now built up storage on site. We've been producing since March. So March we produced 1,500 ounces. In April, 3,300. In May, 3,800 ounces. In June, about 3,400 ounces. And we just announced today that our July production was about 3,700 ounces. So ramp up is going well. Production is getting steady. We expect to see a bit more. Next slide, please. So today, our capital structure is pretty clean and easy to understand. We have actually just under 70 million shares outstanding on a basic share count. On a fully diluted share count, we would be at about 85 million shares. So fairly tight structure for a producer, with strong alignment from board and management. Today, board and management owns close to 20% of the company. We've been public for over 4 years, have never sold a single share, and we've accumulated on market as well. So you have a strongly aligned management team that feels the pain. As we're looking at prices today, obviously quite lower than where a lot of people have come in, a lot of significantly undervalued. But we're here to ride the gain with our investors, and I think that alignment is key in any business where you have a management team that's tied to investors, and certainly we have that, and we're very proud to do so. We're supported by a lot of family offices throughout the world, in Europe and even in North America, that helped us privately and publicly, obviously, launch this company. Eric Spada, as I mentioned, came in. He owns 11% of our company, give or take, close to 10%, I would say. He came in at 2.15, so a price that's more than doubled today. And again, we're not looking to raise any equity at these levels, nor do we need to. Lim Advisors out of Hong Kong own 7% of our company. Fidelity International, one of the biggest asset managers, if not the biggest in the world, has been accumulating on market over the last 18 months and now own about 6% of our company. And Elliott Management out of New York with Triple Flag, who backed us privately as well, own about 4% of our company today. So very strong, sophisticated investors that come in at higher levels than where we're trading today. I think you'll see the institutional roster grow in the coming quarters as the market improves and as we continue to execute. We have 3 banks that cover our stock today, obviously with targets that are much higher than where we're trading today. Hanneman Partners in the UK, Stifel GMP out of North America, and Haywood Securities also cover us. We expect another bank or 2 to cover us over the next couple quarters. So I'm hoping that by the end of the year, we have 4 to 5 banks covering our stock, bring more eyeballs on the story, which is quite an exciting story, as I mentioned, because we have production today. We have expansion on that production over the next 2 years to double our production profile, which with a higher meaningful mine life expansion. And we still have exploration on both properties. That's quite exciting, and I think people will get excited about. Next slide, please. So why Mongolia? I mentioned it briefly already. Very strong endowment of resources. You have a super major, the second biggest diversified major in the world, Rio Tinto, committing a lot more capital to their project this year, streamlining that ownership. It's about an $8 billion additional investment they've made commitment this year alone. So that's a very strong endorsement of the country. You've seen the investments from the Chinese, both in infrastructure and even Zijin Mining making their first investment publicly into Mongolia about 6 months ago. So certainly a place where we have an advantage, having executed, and a first mover advantage, and we're looking to grow significantly. The next few slides, I'm just going to quickly show you the property. This is our leach pad today. We're currently on cell number 5. This is where the oxide production comes from. So we're mining, crushing, and stacking on a leach pad that's in production today. Next slide, please. Yeah, next slide, please. Yeah. Perfect. So this is a very important slide that shows you where we came from, what we purchased when we bought this from Centerra, and where we're going. So ATO 1, 2, and 4 were originally the 1.2 million ounces that we purchased from Centerra when we bought this deposit back in 2017. Centerra had said that these were breccia pipes. So carrot-like breccia pipes, if you look at AT01, very similar was what AT04 looked like. Closed off breccia pipes. They said there's no room to grow, that there was no extensions at depth or to grow. Well, AT04, we proved that model wrong. AT04 is now double the size than it was originally when we bought the project. So through our strong technical team, we expanded AT04. Downward plunging component, still growing, and we've doubled the size. We've also added a new discovery called Mung. Mung means silver in Mongolian, so this is the fourth deposit here on the right. That's only been drilled down to about 350 meters vertical depth. It's about 440,000 ounces that we've added to our book. That 400,000 ounces of that have not been included in our phase 2 expansion. So that's very important because we're going to roll that into our phase 2 expansion plan. You're going to add some more mine life with that addition of 400,000 ounces, or increase our production profile. Most importantly, we've now drilled at depth. We've ATO1 and 2 have been drilled for the first time ever since we took over the project, and we've shown that they continue to grow, or there's new discoveries underneath. ATO4 still open at depth, and the Mung deposit is still open. So all 4 deposits open at depth that continue to grow. But the feasibility study for phase 2 is based on ATO1, 2, and 4 sulfides. So everything about 40 meters below surface and below that, where the oxide mine is from surface down to about 40 meters. Next slide, please. So this is just the updated reserve estimate we put out in June last year. You can see the growth to 1.6 million ounces on a gold equivalent basis from the 210,000 ounces where we started. So significant growth here on our reserve table. Again, not including the additional drilling that we completed late last year that showed some significant new discoveries and extensions. So what I wanted to highlight on this slide here is the grade for lead and zinc. So in our feasibility study, we already put out a flotation plant is inclusive in the capex that would process the base metals that do exist. So it's gold, silver, lead, and zinc in the phase 2 operation, and lead and zinc will be processed through the flotation plant. The lead and zinc grades here, you'll see, are 0.78, 0.6% type of grades, which I'll show you with our drilling, that we've encountered meaningful intercepts that are 10 to 20 times higher than the grade in the feasibility study. So that's a significant amount of value add. Next slide, please. Very quickly, the phase 2 capex is 130 million US. So this is the feasibility study we put out late last year. All-in cost came in at $850. And you can see the grades there, the lead and zinc I mentioned, lead 0.46%, zinc 0.78%. We've encountered zinc grades of 10.5% over 21 meters, 8% at 55 meters. So massive intercepts that are top notch, that will add meaningful mine life. We do believe this 10.5 years for phase 2 will be 20 plus years. And so while we're constructing phase 2, there'll be a lot of optimization work that will continue to make phase 2 more robust from a cost perspective, but also from a production profile and life of mine perspective. The cost here are based on diesel power. We will be connected to the grid power, so we'll have a power solution that we can update the market on in the coming months. That power solution should save us about $100 an ounce, or 10 million US a year in OPEX. So that's a significant savings, but that's not included in the feasibility study. That will increase some of the capex. You'll probably see the capex increase to closer to 150 million US if you include that power upgrade. And because of the world we live in, things do take a bit longer, cost more. So on 150 million US capex, 70% of that will be funded by debt. 60 million US of the debt was already received late last year, and we'll look to expand that debt from 60 million to about 110 million US by the end of this year or early Q1. We don't need the capital today. We are spending money on phase 2 today on crusher installation. That was a $5 million purchase and $6.5 million all in with cost, and that'll be fully constructed and commissioned by late September, early October of this year. So that's a phase 2 item that's already being constructed, and it's pretty significant. Again, we're going to be adding that Mung deposit into the mix here for phase 2, and we're doing some other optimization work. So a great base to build the phase 2 on that will continue to grow and only get better in time. So we're very excited because in 2 years' time, we're producing 100,000 ounces at what looks to be, call it a $900 margin today at today's pricing. And you can do the math on that. $900 on 100,000 ounces. That's more than our market cap today in cash flow. So in very short order, we have a high growth here. Next slide, please. So very quickly, this is the drilling I mentioned that's underneath the ATO 1 and 2 deposits. You can see the 21 meters at 10.5% zinc, 15 meters at 8% zinc, 55 meters at 4.3% zinc, 23.5 meters at 6.3%. So these are the 10, 20 times higher grades I mentioned that are continuing to grow at depth. Still shallow, but growing. And again, proving the model wrong that there are more ounces. We think this deposit, including all 4 deposits, is the mining license is probably 3 to 5 million ounces. So a lot of growth and opportunity here. Next slide, please. I won't get too much in this. So I'm going to flip through the next few slides so we get to UK. But just quickly, you can see the operation. Next slide, you can see the crusher crusher being installed and what the operation looks like. So if we can just highlight that. Yeah, perfect. So that's the crusher. You can see it's a big construction going on here today. It's very real phase 2 expansion. But the beauty here is that 1,000-ton per hour crusher will be operational and allow us to process more oxides in phase 1. So our goal is over the next 2 years, while constructing phase 2, to take as much cash and ounces out of the phase 1 mine to not only fund phase 2, but provide that working capital and growth capital cushion to continue to explore ATO as well as our next project, which I'll get to very quickly. You can flip through just the slides very quickly till we get to the slide 20. Perfect. So last but not least, and I'll sum up here, is our second project we also acquired in 2017. 14,400 hectare exploration license that has never been drilled before we purchased it, but it been drilled all around. So very exciting project that we didn't have the time or resources to focus on while we were getting ATO established, while bringing the cash flow online. Now that that's up and running, we can now fund our own exploration on this project and of course on ATO. So that's what's really nice is this project alone is like an Explorco by itself. You could be on itself as a listed Explorco, but we hold it, and we're not getting any value for it today. So we have a 3,000 meter program that just started here, 15 to 20 holes. So the gold outlines are our 4 discoveries on the project. So we've done the groundwork, IP, magnetic, soil sampling, and even trenching. The trenching results from surface have yielded some very exciting results. 1.5 grams gold, 450 grams silver, 3% copper, 4% lead. Very exciting. But what's even more exciting is what our neighbors and our peers have explored and have had success on in the last couple of years. So the white licenses to the north and the south are held by Erdene Resources, also listed on TSX, and they have over 1 million ounces on those 2 licenses, and we've yet to drill ours. So we do see this as a next production center for us down the road, get this to a resource in the next couple of years, and then in a few years after that, we can get ready to build down here. Maybe it's an area for consolidation. Certainly very exciting opportunity for us given the success that Erdene has had. They're saying that they'll have over 2 million ounces there, and they think it's even 3 to 5 million ounces, and we're the larger package smack in the middle. So quite exciting opportunity here. With that, I just want to sum up, what Steppe Gold offers today is cash flow and production expansion to double our production over the next 2 years. Quite a lot of news flow from the production, the cash flow, as well as optimization updates on that phase 2 expansion, including the financing package that'll come in place. And what's most exciting is all the exploration sizzle and opportunity that any Explorco offers, funded from our own cash flow. So we don't have to go to the market to go drill out this new property or even our existing. With that, I think I can open up to questions.
Thank you so much, Anil. I have a couple of questions here, and you're mentioning somewhere here 3-year payback. And for a layman as myself here, what kind of average zinc and particularly gold price should I be looking for here to receive a payback of 3 years on this project?
Yeah, listen, I don't have the zinc price on hand. Zinc and lead were about 30% of our revenue when that feasibility study was put out. It was put out in last year's pricing, which would probably be a discount to last year's pricing. So I don't have that. On the gold side, it was about 1605 gold price, I believe, for the gold, and silver was probably around $18, give or take, for pricing. So there's obviously some positive reconciliation there, given the current gold price environment. We don't need to rely on a higher gold price to make a lot of money in phase 2.
Excellent. Thank you so much. Mouth-watering growth, and obviously you mentioned the capex and the capex expansion here. So basically, if you increase your capex, you're one step closer to success. Is that the way to look at it?
Yes, I would say so. Yeah, absolutely.
And also because obviously we went through the slides pretty quick about the crushing elements of the stuff, but is it rightly understood that you managed to build this well, more or less over a period of 2 years?
Yeah, actually the build for the phase 1 operation was 14 months and 25 million US. And just as reference, we produced 25 million US of revenue, top line, obviously, in that first quarter of production ever. So you can build things quicker, cheaper, and still high quality in Mongolia, where you have the manpower, skilled labor force that are much cheaper. You have the logistical and cost advantage of having China right next door. One other thing I forgot to mention, which is very important because it could, this is something we didn't pay for and we don't have to in the future, is the grade that we're seeing on the oxide mine. When we bought it, the reserves were 1.25 grams, which is great for any oxide mine in the world, by the way. That's still high grade oxide mine. We've seen close to 2 grams per ton average since we've mined. So what that equates to is obviously more gold, and more recovery, higher recovery. So the oxide mine was 3 to 4 years mine life at 50,000 ounces when we started the company, and yet we're looking at probably 3 to 4 years ahead of us today. So that's a beauty, because that's cash flow buffer that we don't have to pay for or have additional capex that can help underwrite the company in the future.
Thank you for that. And I just noticed that you have a couple of bigger names around you, like you mentioned Rio Tinto, for instance. And forgive me my ignorance here, but is there a possibility for you to piggyback on their infrastructure, or would the distance be too vast? Yeah,
so good question. So for the ATO project, which is in the northeast of the country, there would be no synergies in the infrastructure or relationship, given that we're actually very close to Russia and China. It's about 100 kilometers to the east as well, and Russia 150. So it's actually very easy to get things in from that side of the world. You have the Trans-Siberian Railway, and all the roads are built. So infrastructure is already built out in that region. So we're actually well equipped for the other project. Certainly, we would have some benefits from what Rio Tinto is doing down in the southwest of the country, in the south of the country. But it is certainly a more barren region that needs an infrastructure build out today.
Excellent. Well, I thank you so much for that. And my final question here then will be, although you're very successful, would that success lead to a bid for like the Rio Tintos of the world? And would you be open for that?
Listen, we're obviously large shareholders of the company, and we are entrepreneurial. That's a price sensitive question. We're not looking to be sold. There's a lot of room to grow. We're just getting started. We do believe we're worth 5 to 10 times our current valuation. So we have the luxury of waiting and building that valuation before we even entertain it. And I know we're running out of time, but you don't have to rely on a bid to have a liquidity event for ourselves and investors. In fact, in a few years, when you see that cash flow come online from phase 2, it's quite significant compared to where we are today. So you can buy back shares or create a special dividend policy to create a liquidity event for ourselves and investors without having a trade sale. But certainly, right price, right time, sure. But it would have to be, multiples and multiples of what we're trading today for us to even consider that.
Excellent. Well, thank you so much for that, Anil. Obviously, you're in a pretty good spot, and I would take it that is more to come. So, with that, thank you so much, Anil, and thank you for everyone who's watching. And with that, we will take a short break when we continue our journey, and this time we will make a quick stop in Brazil. So, we'll see you in a short while. Stay tuned. Welcome back. Our next stop is in, as I mentioned previously, Brazil, and next we have Aguia Resources. Aguia, listed as AGR on the Australian stock market, describes itself as a multi-commodity company with pre-production phosphate and copper projects in Brazil. And if technology is working, we shall now have Fernando Talarico, CEO, on the line. Fernando, can you hear me?
Yes.
Excellent. Well, Fernando, please take it away. This is very interesting. Multi-commodity company, indeed. The floor is yours.
Thank you. Well, thank you for your time, and welcome to Aguia. So as our presenter was mentioning, Aguia is a junior mining company listed in the AXX. This is a snapshot of our share register. Essentially a market cap of around 20 million and a little bit above that. And as I will show to you, the company is currently extremely undervalued. These are the two leading executives of the company. Myself, over 30 years experience in the mining sector. I'm a geologist and a PhD in geology by training, and have worked half of my career in the major space with BHP, Vale, and others. In the past 15 years or so in the junior space, which is really where I want to be, and I like to. Christina McGrath is the executive chairman and a corporate lawyer with over 30 years of experience. And let's move on to our location. So we are operating in southernmost Brazil towards the boundary with Uruguay and Argentina. And as I said, the multi-commodity, we have two projects. The most advanced one is a phosphate project, and then we have a copper project following in the pipeline. In the map to your right, all the blue stars are phosphate assets, and those in orange yellow are the copper assets. We started in this region because we were the first to visualize the potential for a greenfield discovery of phosphate in this region, which we did. But we were the first company to look for phosphate, prospect of phosphate, and also to materialize a discovery in this space. And because we were the first, we were able to secure all other phosphate occurrences in the region. So everything belongs to the company, all these assets. Being the most advanced one, this TEP, the one we're in the imminence of starting construction. And as phosphate was the new story in that region, on the other hand, copper was known for over 200 years of exploration and mining, copper and gold. And because we were operating in this region and we had field offices in both Caçapava and Lavrastown and also in Porto Alegre with our staff, we progressively over the years started put together quietly a copper portfolio. And we also have made a greenfield discovery of copper as well, which we are advancing into engineering at this stage. Just a snapshot on, let's start with the phosphate market. Why is the commodity important for Rio Grande and for Brazil? Brazil, as you all know, is a powerhouse in the ag space. We produce basically every ag commodity in the world. We're either first, second, or third in each one you can pick. And at the same time, Brazil is also the biggest fertilizer importer in the world. Let's specifically talking about phosphate. 10 years ago, when we were looking at this market, we were importing essentially 60% of our phosphate needs. Currently, we're over 72% imports of our phosphate needs, saying in the entire country. But in the particular state where we are, Rio Grande, we import 100% of the phosphate that used. Rio Grande is usually the second or third in the national rank of ag commodity products annually. To give you an idea, in the past harvest, the last harvest, we produced here about 36 million tons of grains. That's equals about $50 billion in wealth, which represents essentially 40% of the state's GDP. So it is a very serious business here, a lot of money involved, and again, 100% of the phosphate needs that are used to support this business are imported, mostly from Northern Africa and a little bit from Peru. And we are going to be the first producers in the state. The project is now waiting for the license, the operational license. Essentially, we need the permit to start construction, which is imminent. We expect to be starting construction in the next 2 months. After this, we are going to be in the construction period for about a year. So we expect to be in production by late next year, October, November 2023. These are the economics of the project. We're looking at a post-tax NPV of $70 million. The rate of returns just goes through the roof because the entry ticket, the capex, is very low. We're talking about 12 million Australian dollars, of which we have already secured used 2.5 million, acquiring all the land that's necessary for the project that already belongs to the company. Then we go into the construction period. Essentially, the resource, we're talking in excess of 105 million tons. This first 18 years life of mine will take the oxide material from surface down to a depth of 35-40 meters. We're looking at an annual EBITDA of 14 million per year. If you go back and do the math with the price of the stock now, you can see there's a huge potential for dividend payments. And these are other credentials that we are very proud to present about our project. This project will be a very unique operation. There's a cartoon here in the bottom right of the processing plant. We're now in the process of getting the processing unit certified by EDGE, which is a member of the IFC, for a net zero operation. So we're zero water, zero carbon, and zero energy balance. And also we have started the prototype of a foundation already that will ultimately be operating a park where the surrounding the mine. So we have bought 350 hectares, of which we will use 50 hectares. The other 300 will be used as a park on day one of the operation for the community, and also to reforest and generate carbon credits. Okay, so now we are entering on the fourth consecutive year of agronomical test work. We have engaged an agronomical station. An agronomical station is a private research station that does agronomical tests. So we're testing our product, which is, there's a cartoon of it on the bottom left. Pampa Falls, this is a big bag, 1 ton big bag illustration. This is mostly how it's going to be sold to the market. So we're testing the product in different situations across the state. We are testing every ag commodity that the state produces. The leading ones are soybean and rice, and then followed by wheat and corn. And as you see, we have a performance running from anywhere from 96 up to from rice going to 98 in the soybean, and with the wheat 102, actually exceeding the TSP, which is triple simple, which is the imported product that's being sold now. So these are the foundations of our sales and marketing department. So it's a very technical sale. We're going to be selling this to the end users, mostly the ag co-ops in the state that are very organized, very professional. So these sales are made to their technical team, and the data that we have built over these 4 years are going to support all the sales. Next slide. let's move into the copper. Why is the copper demanded, and where how does it fit into our strategy? So as I mentioned in the beginning, we started prospecting and materialized the copper discovery in the region, essentially because we were in a very prolific and historical copper belt, and over the years we were able to put a very good portfolio together and materialize a discovery. How does it blend with our phosphates strategy? Well, the boost in demand on the copper side is really being pushed by the green energy replacement of fossil fuel by electrical vehicles, growing demand for wind turbines, growing demand for electrical panels, solar panels. All of these take a huge amount of copper, as you are all aware. Just to illustrate, a regular fossil combustion vehicle compared to an electrical vehicle has 10 times more copper to support all the wiring, etc. So if we would go into the full replacement of fossil vehicles to electrical vehicles now, we wouldn't even have enough sufficient copper to support this change. So this is obviously being reflected in the demand for copper. Next. So this is the project we have developed. We have materialized this greenfield discovery. We're looking at a resource in excess of 22 million tons. It will support a 14-year life of mine operation. It's an open pit operation, very simple and very cheap. Crush, grind, and then we heap leach the material to produce metallic copper at the end. The end pit resource is about 18 million tons that we will be mining over these 14 years. The entry ticket again is low. We're talking about $20 million of capex, which yields us in 14 years NPV of 108 million Australian dollars. Again, the rate of return is very expressive. Compared in the mining space, we're talking about 43% of rate of return and a very quick payback. So this is where we are now. We are essentially finalizing the design of the flow sheet of the project. We have tested already all the stages. Everything works on the conventional side of technology. We have gone through an extensive recovery test in Australia, in Perth, with ELS, doing the leaching of the copper. We have been very successful, very good extractions. But what we want to do now is advance and go a stage ahead on the processing. So right now we're in the middle of a 14-month period of bio-leach testing. So what we want to do, conventional leaching of this material is done by sulfuric acid. And essentially what I want to do is prevent the company be transporting up and down sulfuric acid in the state and also handling sulfuric acid at sites. So we want to substitute the traditional sulfuric acid leaching of the copper by bio-leaching, and essentially what we do is introduce a cocktail of bacteria that are going to essentially digest the sulfides, eat up the sulfur, and liberate the copper. This is done in a very environmentally friendly way. This is not a new technology. It has been around already in the market for decades, and it's becoming more and more popular. To give you an example, BHP is using this technology in Escondida, which is BHP precedes doesn't need introduction, but Escondida, for those who don't know, it's one of the biggest copper mines in the world. So far it's going very well, and at the end, our intention is to be able to produce what we're calling green copper. So one of the biggest criticisms that usually you can hear on the electrical vehicles is say, okay, you're gonna save a lot of copper emissions over the life of the electrical vehicle, but at the end, you're pretty much going to balance all the carbon that was generated to create all that copper, because the copper usually is not done in a carbon efficient or in a net zero carbon flow sheet. So what we want to do is green copper, so net zero carbon, and the processing plant will be designed exactly like we designed the phosphate plants. It's going to be, again, net zero, so zero water, zero carbon, and zero energy. And by the way, if I have not mentioned, the phosphate plant in this one also will be powered by solar panels. And another improvement in the technology that we're doing is what we call pre-concentration. So we're essentially and we're doing this this week, actually, as we speak, introducing techniques to pre-concentrate materials. So we're going to go through screening and selection of different sensors to reduce the amount of material that goes into the pile. So essentially, we're going to use the cutting edge technology to produce a very environmentally friendly process to produce copper, right? And at the end, as I said again, the product is a copper cathode. This then goes into the port of Rio Grande that sits 200 kilometers from here, and from the port it can be sold anywhere in Brazil, where we have smelters, or Europe, you name it. It's the second or third biggest international port of Brazil, connects the state essentially to the world. And these are the next steps, and I just want to go a little bit in more details. This essentially is the path to unlock value for the company. We're very close to this. Obviously, all these events that we're foreseeing will be announced to the market, and we have big expectations for these being highly effective in moving the stock up. All the green dots, actually there are two only, are those related to the phosphate. So let's start from the left-hand side here. So right now we are waiting for the LI. It's the acronym for installation license. So that's essentially, again, the green light for us to start the construction of the phosphate mine. So this is going to when we have the license in hand, take 12 months from construction, so and another $10 million. And then if we skip on to 12 months ahead, then we get the operational license at the end of 2023, and then off we go into production and into cash flow, right? On the phosphates, on the copper side now, as I said, we are in the process of doing the sorting tests and the bioleaching tests, and at the same time we are now drilling in the field. So I have a drilling program ongoing. The objective of this drilling program is to improve the category of the resource. What we want to do is go. Currently, the resource now is 80% indicated and 20% inferred. We want to convert all the inferred into indicated and measured, essentially providing the market higher statistics or confidence of the quality of the resources. And all of these, the new engineering and the new resource are going to be converted into a new scoping study, and so these new economics are going to be issued to the market probably in the beginning of next year. And shortly after that, then we say in the first quarter next year, we start the EIA, which would be here. So then we go, which is the environmental impact assessment. That's the first step of the permitting process, which we will expect to be finishing by the end of next year. So at the end of next year, we will be starting operations on the phosphate and finishing the permitting, the baseline assessment of the copper. Then we go into the formal permitting process for the copper, while we're again continuing into production on the phosphate side. So by the end of 2024, we intend to be fully permitted. When we then go into construction in 2025, and by 2026, we expect to start the production of copper. Between now and the first quarter next year, we will probably be looking to a capital raise, and obviously this will probably be our last capital raise as we have done in the past. So because after this we're going to be into production. So why invest? After the two projects are in operation, we're looking to be unlocking a value of combined about 180 million Australian dollars in NPV, a combined cash generation, annual cash generation of in excess of $30 million a year. Again, going back to our stock register, you can work out the potential dividends that this can provide to the current stock register. We have, I have said this in the beginning, but we'll just emphasize huge exploration potential or expansion potential. So on the phosphate, we don't have only the current project that we're starting to build the mine now, but we have other 5 in a total of 6. And the same thing for the copper. We don't have only the resource that I just explained to you. We have another 10, all sitting around the same region in a radius of 60 to 7 kilometers to each other. So we look at the current potential is if we have these projects that are more advanced from functioning, say on the copper and on the phosphate side as a hub where we will be receiving ore from different targets or different resources around the same area, meaning that essentially we have huge potential to expand operation, to expand the annual EBITDA, to expand the combined potential NPV that we can generate. And just reminding you all that we have been in this space for more than 30 years. Me and my team, we were responsible for over 12 greenfield discoveries in South America and other places of the world. We have operated mines, so this is business as usual for us. Something that we like to do. And finally, but not less important, I encourage everybody to read our disclaimer, especially when related to our forward-looking statement. And thank you very much. Back to you.
Fernando, one thing that strikes me here, and I just need to clarify it and perhaps expose my own ignorance, and that is you're referring to a net present value of almost $180 million, and you have a market cap now of what, 25?
Exactly.
Yes, that must be quite interesting for anyone looking at the stock.
Exactly. That's the point I brought up on the introduction. The company has been extremely undervalued for a number of reasons. The market, first of all, has been bouncing up and down in the past recent years. The junior market in general too. We have gone through every little bump, and from the COVID to change of control in the company, several situations. And so we strongly redesigned and re-engineered all the company. We have downsized dramatically. Our burning rate is completely different when it was in the past. To give you an idea, now we have less than 12 employees and the whole team doing all this. So we dramatically changed all the profile of the company. Now we have a very lean and very efficient structure that obviously is going to, step by step be reflected in stock. And obviously these projects and these combined NPVs and all of these are recent developments of the company.
And also one thing that is quite interesting is that you would be able to provide the region's food production with much of its needed help here. What is the current situation with the authorities? Because they will, at the end of the day, grant you the licenses to go forward. Surely they must be, clapping their hands and helping you in any way they can, or?
Yes, we think that things are going okay. We had a little bit of a delay with the government, but things are pretty much resolved now. We're moving forward. As I said, we're now expecting the installation license. We have had huge support from the local community, starting with the public hearing. With the state government, federal government as well. The situation with fertilizers in Brazil became so critical that it became a national matter. And now, unfortunately, with the sad events that started in Eastern Europe with the Ukraine and Russian war, it just showed how fragile the fertilizer situation is in Brazil. And this point now has been all over the media. It just came to the public attention now how important it is to get stronger on the phosphate side. And I'll tell you, right now, and the point that we are on the verge of eventually going into a global food crisis, we have the moral obligation to put this project in operation as quick as we can.
Mm. Yeah, excellent. And I think you're making a good point there that all of a sudden fertilizers has been the name of the game. One final question here, conscious of time here, and that is the copper. Why not divest?
Divest, a spin-off, you say?
Yes.
Well, that's a good point, and we're often asked this. Eventually, depending on the situation, we might even consider this. The way I like to look at it is right now we have 2 pre-production projects right on the verge to start production. So if we're looking at the capital raise now, see between now and the first quarter of next year, this is probably going to be the last capital raise that we need to do, because the phosphate will finance all the copper expansion and production. So thinking about dilution, and especially thinking about my very loyal shareholder base that has been with me in the past years, this will be a real bonus for them. If I divest, I will probably have to start capitalizing the new copper investment, and this will carry on to dilution, etc., etc. There's pros and cons we can argue, but the way I look at it now is my target is to offer as less dilution I can to my existing base.
Excellent, Fernando. Thank you so much. This should be very interesting to follow. And we wish you the best of the luck, and we're sure to see you back soon. So with that, thank you very much. And we will take a short break while we connect yet again across the pond. And we will reach the final stage of our journey, which is in Africa. So stay tuned. Right, welcome back. On our journey around the globe, we have come to this presentation's final destination, and that is Africa and Loncor Gold. As a high quality gold ores never run alone, Loncor's project in Adumbi, with reservations for my pronunciation, which is adjacent to Africa's now biggest production gold mine. Loncor has the potential to really boost its net present value. Here to give us an idea on how an investor literally can strike gold on the stock market is CEO of Loncor, and that's John Barker. John, can you hear me?
Perfectly, and thank you very much. It's a real pleasure to be presenting with your forum.
It should be a pleasure, I'm sure. So please go ahead, take us through your presentation.
Well, here we have it. Here's a picture. This is the emerging high-grade, multi-million ounce gold deposit called Adumbi. Your pronunciation was excellent. It's stepping out of the COVID shadow and beginning now to attract attention as it continues to grow. I think just to summarize up front for investors, the key is this will be mined. It's not widely known given it's emerged during COVID. And various valuation metrics suggest it's one of the most deeply discounted value stories out there. Independent valuations suggest a value of around $900 million after tax at current gold prices. And we own 85% of that $900 million, and our market cap's $45 million. So just to warn you that the content may have forecasts, etc. in the presentation. So there's a disclaimer and cautionary notes. So here we are. We're in the DRC, Democratic Republic of the Congo, and it's a huge country situated right in the heart of Africa. It's the size of Western Europe. We're developing up there in the top right-hand corner of the DRC, and you see the black star. And many companies are developing world-class assets across the country. Copper, cobalt, tin, and gold are just a few of the commodities, attracting leading Western and Chinese companies to the riches in the DRC. In the south, you've got Ivanhoe Mining, led by serial mining entrepreneur Rob Freeland. He's developing the Kamoa-Kakula copper deposit into one of the world's largest copper mines. And at every step, it's ahead of schedule, commissioning and expansion. It's really moving ahead very aggressively. BHP, a name most of you will know, is the latest name to be looking at the DRC. However, for us, it's that proximity to the Barrick-managed Kibali mine up in the top right-hand corner, Africa's largest gold producer, and illustrates clearly what can be achieved close to where we are situated. So for those investors wanting a little bit of comfort for the DRC, it may be a new jurisdiction for you, I've got two of the next slides that may give that comfort. Looking at the copper output, as I said, down south, the DRC is close to overtaking China as the world's third largest copper producer. Production has more than doubled since 2016, and the current president, Felix Tshisekedi, came into office in early 2019 as an overseen increased investment and output in that sector. But it's gold, which is obviously close to our heart, and as I mentioned, the world's second largest gold producer, Barrick Gold, has operated the Kibali mine just over 200 kilometers from our ground for over a decade. It's not just any gold mine, but it is Africa's largest producer of gold, fifth largest gold mine in the world, and lowest unit costs of Barrick's operations in Africa. So again, just giving you comfort of what can be achieved. And having started out as an open pit, it now produces a relatively open split from open pit and underground, and mining below 800 meters, significantly deeper than we have drilled so far at our deposit. There's a thriving local infrastructure emerge, and Barrick suggesting over 4 billion of value has been created in that area. Our emerging Adumbi deposit reflects similar grades, both in the likely open pit and underground, to what this deposit has. So we're listed in Toronto, New York, and Frankfurt. Our market cap sits close to 45 million US. All key management own shares, with Arnie Kondrat, the executive chairman and founder, owning just under 23%. So senior management is very much aligned with advancing this company and releasing the latent value we believe is within the company. We have two gold miners on our books, Resolute Gold, an Australian gold miner with assets in Africa, and then Newmont as holder too. Looking at management, everyone talks about experience, but it is undoubtedly critical in places like this. And Arnie Kondrat has operated in the DRC for almost 3 decades, working with 4 governments, building a portfolio of quality gold assets on a number of occasions. Peter Cowley, our president, has a long history of leading geological teams in Africa. For example, he was the senior executive with companies such as Anglo Gold Ashanti, when it was Ashanti. He and his teams have found 14 million ounces of gold in the DRC and a further 17 million ounces in neighboring Tanzania in very similar geological terrain as we have on our ground. I myself analyzed African gold equities for 20 years, latterly with one of Canada's largest banks, the Royal Bank of Canada. And I focused mainly on African gold companies, so I've kicked the tires on many African projects in my time. Post my life as an analyst, I joined 2 listed commodity plays, and both were taken out. So our team is small, but I believe has complementary skills and depth. ESG, it's imperative that ESG remains at the forefront of any development. And in the past, we have managed to build schools and clinics, plus improve water availability. And looking forward, as we grow, we are looking at further contributions to education and health, plus improving the local infrastructure, such as a road network. Looking at potential carbon credits into the future, on our 1,000 kilometers squared of ground, we have one of the last great African forests. We have chimpanzees running around there. This is really a pristine ground, and it's imperative that we look to leave the environment in a more positive position than when we started. And as we grow, this initiative will also grow in importance. And then the other key element, I think, as it stands, is we've included hydroelectricity as the likely key generator of electricity for our project. We have already had numerous sites outlined by Knight Piésold that will allow for power generation. And Barrick at Kibali have shown that this environmentally friendly alternative can also be a very positive unit cost, as they drive most of their costs through hydro schemes. Looking at the geological pedigree of Ngayu belt, local geology that hits the surface in consecutive ridges made up of what's called banded ironstone. It's what attracted the Belgians in the 1920s to potentially mining gold, as they did in the area. And they focused on our main project, Adumbi, at the time. The region, though, you'll see the lakes going up at a diagonal there. That is essentially the Rift Valley. And to the right of the Rift Valley, below Lake Victoria, you've got major projects such as Gator, Bulyanhulu, tier 1 projects in mining terms, plus 10 million ounces. 5 million ounces is actually the break even for tier 1. And then you've got the Rift Valley, and to the left of it, you've got the same geological structures. We dominate the emerging Ngayu belt, and there you'll see to the top right is the Kibali mine of Barrick that I've talked about. We now control over 5.1 million ounces of high-grade resources at Ngayu, mainly dominated by the Adumbi. And hopefully we'll see this figure grow through further development. So looking at our area in the center, we control the majority of the green area, which hosts that banded ironstone. So many hills through the area reflecting the banded ironstone. And to the left is the Kibali area that we're talking about, which is dwarfed at the same scale by our ground. And to the right, the Gator, which is the one in Tanzania with over 15 million ounces. And we have gold throughout our area. At Macapella, we own 100% of. At most of those other areas, we have gold. Either we've drilled or there's some artisanal activity in some of the areas. But currently, the focus has been Adumbi at the bottom right, within the Imbo project area, where we own just under 85% of the project. And the government has its 10%, and then we have some locals owning a small stake. So targeting Adumbi, pushing it through tier 1, that 5 million ounce barrier. We believe it is the company maker. So infrastructure, this is early stage exploration, and with it, infrastructure is not the best you're going to see. But I mean, I've been to many areas like that in the past. Been into Venezuela, I had to fly in by chopper. Been into Tanzania when 20 years ago, it took me a day to do 200 kilometers. That's all changes as development grows, and we see ourselves as part of that changing process. We've recently completed a kilometer airstrip there at Adumbi. And we have actually had a site there for almost 13 years, and we have established core shacks where we process the core, and then now we can fly it straight into Tanzania for processing in independent lab facilities. So while we continue to grow, though, we still had very few visitors, mainly because of COVID. No investment bankers have visited. None of the big banks have visited us for a number of years. No brokers have been down there. This is a story that is still very much emerging. So focusing on Adumbi, and on the right, you'll see a red dot with Adumbi beside it. It's around 900 meters long at surface and goes down open. We've drilled down to around 650 meters. And then there's two other smaller resources at Katenga and Manzako that will probably form the mining plan as well. And just if you look at it, we now have 3.66 million ounces at Adambi, but the real highlight is the grade. That's the grams per ton of gold, which translates to a revenue. And whilst most West and East African deposits running around 1 gram a ton, we expect to be mining this particular pit at around 2.17 grams per ton, according to our recent PEA or scoping study. So Adambi's grown through COVID. There you see early 2020, 1.36 million ounces, now with 3.66 million ounces, all within a potential open pit shell, and with that predicted grade of mining around 2.17 grams. So the open pit, as I say, has a very robust grade and allows a lot of flexibility. If a small company comes in, it could be mined at a smaller tonnage and get swift payback. But we started a scoping study on a large 300,000 ounce per annum pit with a 10-year life. And those ounces that we found, people wonder how much does it cost? Well, our growth has been at $5 an ounce. So high quality ounces has been found at around $5 an ounce. And another key thing is we have a mining permit for this too. You'll hear around the world how it's getting more and more difficult to get things such as mining permit, the last permit stage as far as mining is concerned. But we already have that in place for the Adambi project. This is a cross section through Adambi. And the purple, pinky purple in the center is really the high grade zone. And our resources that we have there are split into two classifications, indicated, which you've got 1.88 million, and that's essentially closer to the surface. And then moving down towards that red dotted line, which represents the bottom of the pit, we have inferred, and those are at a higher grade, 2.65, which indicates as we're going at depth, it seems to be getting higher grade, which is fantastic, of course. Again, all very positive for grade. We have drilled deeper to the bottom left in the purple. You'll see one hole there. And in particular, that has a similar grade, if not better, than Barrick is currently mining at depth at Kibali. So all signs are that it's mirroring Kibali as far as grade. We don't have the same ounces. They're sitting about 12 million ounces, but we certainly have the potential for this to become a major project through 5 million ounces if we continue to drill at depth where the arrow suggests open. So with that resource that we have, we instigated a preliminary economic assessment, or in essence a scoping study. And these are the bare bones of it, but there's more detail can be seen on our website or later in this presentation. So as I said, we went for the big 300,000 10-year life of mine cost, $950 an ounce. That's all costs included in there, future capex, etc. per ounce. So you can see versus the current gold price of $1,800, it's robust. Pre-production capex could be considered quite expensive, but it includes around $140 million for the hydro and scheme, and that likely will be outsourced to a third party, the hydro scheme. So you can see there the payback, 3.76. As I mentioned, if you're a smaller entity or you want to be much more aggressive, you would probably run a smaller operation, smaller capex, and get a much swifter payback and higher IRRs on this. But even with this, a large project, we're looking at current gold prices, as I say, around $900 million post-tax NPV on this project. Our market cap for our 85%, as I reiterate, is $45 million. Significantly undervalued. I think it's about 5% to the underlying NPV valuation. So we want to continue to drill underground, and we have the potential to increase resources through that magical 5 million ounce that gold miners talk about. And when I talk about 5 million ounces, major gold miners and mid-tier gold miners continue to cry the fact that there are not major projects to acquire. So needless to say, we're starting to get corporates looking at us. And we hope one way or another, this will all lead to a re-rating of our stock. Other exploration, well, when I was down there a couple of months ago, I was showing this, for example, and this is from an area of ground we've done no exploration on. And I'm the first one to say 2 beautiful samples of gold don't tell you got something significant, but you'd rather have them than you don't. I think that's all we're saying here. It gives you an indication of what we have to look at on our ground outside of Adumbi and some of our other areas. These are really museum quality samples. But we have had active grassroots both close to Adumbi. This is about 9 kilometers away, where we've been doing work in early stage, but it has been encouraging. And in the future, we'd like to drill some holes. But one area that's growing in importance is Macapella, around 40 kilometers from Adumbi. As I mentioned earlier, we have 100% of that. And what's been happening there, we already have a resource at Macapella. 1.1 million ounces split into indicated and inferred, very high grade, 8 grams, 5 grams a ton, a completely different beast to Adumbi. Adumbi is a very, very wide project, really made for open pit. This is a narrow quartz vein with gold, rather like the samples you saw earlier on. But we have applied for a mining license on this project, which will then allow us to look at our strategic options for Macapella. Should we spin it out separately, try and get some value into it, because we've got no value in our company for it currently with our current market cap? Should it become a feeder pit for Adumbi? We're not sure. We just want to keep working there. And if you look at some of the hits there, the true width, 4.3 meters, 64 grams per ton, these, I can tell you, are exceptional holes that we're getting. So we want to drill this a little more, both along the length and at depth. So this, again, is sitting in our pocket with no value being associated. So this is a summary of our resources. In total, I mentioned we control 5.1 million ounces. Our attributable, because of our smaller holding in Adumbi, 85%, we're about 4.5 million ounces. And it's grown significantly, as I've already mentioned, since 2020 in particular, but it's grown since 2018. And we'd look to grow that chart even further. And again, it's the quality as well of these resources. But I think, if you're considering being an investor, I've told you about the country and how things are happening in the country. I've told you about what we've got. I've told you why we're not being appreciated, because it's a COVID story. I had a newsletter writer out of Vancouver who told me at the PDAC he'd written us down as the stock that he believes will get taken out in the next 12 months. And he mentioned this, and a lot of people at that meeting had no idea who we were. So we need to beat the drum and get out there and tell our story. And this chart really highlights how undervalued we are. On the left-hand axis is the grams per ton, as I mentioned, the amount of gold per ton. And then you'll see a whole bunch of balloons, much lower value, starting at about 0.5 grams per ton to 2 grams a ton. And you see the majority sitting 1 to 1.5 grams per ton. So we far outstrip them on the quality of our grams per ton in our open pit. And then on the bottom axis, the North 10, 2030, that is the enterprise value per ounce. So that's our market cap divided by our attributable ounces, adjusted for cash and debt. Now, I can tell you these figures are a little out of date, but I want to give you a flavor. Things haven't changed that much. You can see that we are one of the lowest value there, even though we have arguably the highest quality asset being shown there. Again, reiterating what we're saying, we're not known as a story. A company, Orca, which is sitting below us there, the deal was recently completed where they were bought out by Perseus at $60 an ounce. Their assets, the majority of their assets are in the Sudan. And the lower grade, they have a feasibility rather than a scoping study, but nevertheless, you can see the potential upside that I mentioned on our NPV is being reiterated in some of these corporate activities. And another big one was Okla that came through at over $100 an ounce. That was in Mali. So, market's not treating as well, there's no doubt about it. The equity market, especially in our space, is not treating as well. And we're not being, people are not getting involved in our company. And we need to get out there and tell the story. And that's why we're speaking to this forum as part of that process. But given the size, grade, potential to grow, it's just a matter of time before our project is mined. It's just a matter by who and when. And we mentioned back in January that we've started discussions with potential strategic partners. We're looking for people to either come in and fund us through to feasibility study and go for the ride as we move the value curve, or potentially a group that will take us through to mining as well. And while we can't go into detail, we continue to have discussions with a number of interested parties about various avenues to develop this project and release value for shareholders. So this is most definitely ongoing, the discussions with potential strategic partners. So in summary, the key elements are there for our company to move from that relatively unknown, underappreciated story to one that reflects the gold mine that we believe we hold. We've got a top 5 global gold mine in close proximity, valued at 5% of our recent MP value, valued at a fraction of regional peer groups, as I just showed you on the chart. Significant potential to grow, although we already have a larger Dumby deposit and other potential targets. The quality of asset is creating corporate interest, and the quality of the gold asset, it really is quality with both high grade and significant scale. So we believe the unknown Loncor story is set to gain traction. And bang on 20 minutes, that is really the summary of our story. And thank you very much for letting me tell it.
Well, excellent, John. And we have a couple of questions here. But first, I'd like to just reflect on one thing that you actually said and regarding COVID, because that's been the theme for the last 2 years. But and not much good have come out of that. But you obviously have a point that if no one have been able to travel, then there will be a pent-up demand of actually putting feet on the ground and see for themselves. So that should be very interesting to follow the lesser known companies. I appreciate that point. The proximity to an existing large gold mine, and I think you touched upon this on the hydro case here. Can you piggyback on the infrastructure, or are you able to, share the costs or anything like it?
Not for the power. They have dedicated hydro, and they're also putting up photoelectric cells as well to help, specifically for their own demands. As part of the scoping study, we had a group of independent specialists there, which one was a hydrologist from Knight Piésold, and we specifically asked, will you have a look around and look for areas close to us? And he came up with 5 targets that would be sufficient to fill our 36 megawatt potential. So it seems like the best route will be for us to do it alone. We won't need to use all 5 of those, and possibly 3. And then with the possibility of photoelectric as well, although that often means you have to chop down some of the forests in order to. So it's a weighing scale whether we use photoelectric or not. But the other part of it is Kibali. Kibali is a significant mine, being Africa's largest. Significant tonnage. It has significant requirements for chemicals for the plant, for machinery. It has workshops. You name it. It's coming into that mine. So everything that we need is sitting there. So there's undoubtedly some synergies with Kibali. You'd have to upgrade the road. Currently, it takes about a day to take a drill rig from Kibali down to us. So you need to upgrade it. But as I mentioned at the outset, this is not untypical of early stage exploration, believe me. And it gets better as these projects develop. So definitely synergies with Kibali, but not necessarily power.
Okay, interesting there. Could I just ask you on a couple of macro points here, and that is obviously inflation is on everybody's mind here. Has that affected you yet? And how do you see things going forward?
Look, for us, it's not impacting us. We're a small team, relatively small outgoings. The impact would be on the PEA. We got costings for the majority of our things for the PEA or scoping study. We got costings from groups that were mainly operating in Kibali, or we'd used for other things. So they were up to date at the time, but it would have been June, July of last year. And so they're accurate at the time. On top of that, we included a 20% contingency across the board, suspecting both inflation and, being cognizant of where we're operating. So we've already included quite a bit of fat in there. So as it stands, I don't think our figures would change much in the current environment, but it's something obviously we need to be aware of. Inflation is moving up rather than down.
And also, you mentioned a couple of pointers here of DRC and going in the right direction. And am I right in believing that in the shareholders there will be some sort of governmental holdings in the company?
Yeah, that's right. Yeah, there's standard figures in the DRC, much in line with many of the countries in the area where the government has a 10% holding, and they get that 10% holding when you're awarded the mining permit. So as I mentioned earlier on, Adumbi has the mining permit, hence the government has its 10% free carried interest. That's already done. It's already in place. And Macapella, the likelihood is that the government will take its 10% when we're awarded our mining license there, which will happen hopefully soon.
So basically, one could say that it's in the government's interest, regardless who is in the government, that this is a success story which goes for the industry, as it were. Is that rightly understood?
That's correct. And I think taking it a step further, the government's also very aware that the region that we operate in, Ituri, is one of the poorer areas in the DRC, and are very keen to see something like ours develop. So another reason why I think the government is behind us on this.
Thank you. And you mentioned this Macapella. Yes, Macapella license. Is there a timeline? How long does it take you to get the license?
There is not a time. We put it in a number of weeks ago, so we'd hope in the next month or two. But sometimes you have requests for further information, additional environmental information, for example, etc. So that process is ongoing. So I wouldn't want to put a figure out there and be wrong. I'd rather say it's work in progress, and we don't see any major obstacles. But you have to work through it. It is a process.
And that gives me leads me to the last question, really, which is, I mean, obviously pointing out the net present value and the market cap. So it will be extremely interesting to follow all the key events, the press releases and tombstones. So would you give us a feel for what we can expect in the next coming 6 months? What should we be looking for in the market?
Honestly, I believe the next key element that we'll see news on is really on the strategic side. That's where I think that's where we'll see it, and in a way, we've been sitting on our hands a little bit whilst we've been under discussions with various parties on this. And but what we want to be doing, and our wish list going forward, will be to drill further close to surface at Adumbi to improve the quality of the resources to the next major classification, reserves. That's then a precursor for us moving forward to a pre-feasibility and feasibility sometime in 2013. So that's the timeline, some drilling near surface at Adumbi. And at the same time, I'd like to see some holes deeper at Adumbi too, to try and push the resources through that magical 5 million ounces that many of the majors like to put forward there. So it'll be drilling. And then obviously Macapella, if we get the mining license, there'll be news on that. But I think at this stage, in a way, I won't say it's superfluous, because let's say we added 200-300 million to our NPV, it just makes us an even more significantly deeply discounted story. The story remains we're at 5% of our NPV, so we move to 6% of our NPV or whatever it is. So I think we need to keep telling the story about how deeply discounted and unknown our story is.
Well, John, very interested, and we will have the pleasure of seeing you live here in the beginning of September. So with that, I thank you, and one should be watching this space for information. So with that, thank you everyone who's looking, and remember that at the beginning of September we will have Loncor and Steppe Gold here physically to visit us. So thank you for watching, and have a pleasant evening.